The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just before 9 a.m. Eastern Time as we start the trading week, and another important one. We got the Federal Reserve last week. We got non-farm payrolls on Friday. We have midterm elections on Tuesday. We got CPI data out later in the week along with earnings. It starts all over again, and it's an important one tomorrow with the midterms, folks. We'll jump over to some of that tomorrow. It's a very important one for the CPI as well. The markets right now, negative last night when futures open. Let me take this Fibonacci off here real quick. There's your Friday action. You talk about volatility, man. Two-way action right out of the gate on the S&Ps. We make a high in the S&Ps of 38.05. I bring that up because look where we were this morning, folks. 38.05 to the tick. And we made it a few different times. We were actually there at about 7 in the morning. We've backed off a bit. But last night when futures opened, I found myself with the volatility we've been getting. It's always interesting to gauge your own personal response and listen to it, folks, because there was a time, man, where I was opening those futures at 6 o'clock on Sunday and being like, where are we going to be when that volatility was really roaring at a time that kind of subsided? And I feel like it's back right now because there is so much up in the air. Friday's action kind of embodies that. And so last night you opened, folks, you traded up 65 points, 65 points from where we were last night. Volatility is everywhere, man. Watch out of the gate this morning. And I'm not even bearish bullish right now, folks. Volatility. You know, my dad said it many times in his program. You can trade this market two directions right now, folks. You can trade it bullish or bearish depending on where you are, where you're setting your numbers, if you're keeping your stops in place, because just look at the size of the moves you're getting. On a 15-minute basis on Friday alone, you traded with 5 consecutive red bars, man. For an hour and 15 minutes, the S&P's cascaded from about 3,800 down to a price point of below 3,730. And guess what? You got it all back by Monday morning, above 3,800. Right now, though, market's barely in the green. But as I stated, right, man, we are a solid, even where you chopped around for all of last night until 9 o'clock, you got a lift. Okay, that's when Asia opens, I believe, and then 3 o'clock when Europe opens as well. Now, Europe right now, you get the DAX up about 0.6%, Calcarol up 0.2%, FTSE is slightly in the red. Over in Asia, the Nikkei, and you see the acceleration right out of the gate as well in Asia. Nikkei's up 1.2, Shanghai up 0.2, Hang Seng up 2.7% in Asia. So some big numbers carrying our market positive, but will that hold on the open on a pretty important week as we come into the midterms? NASDAQ slightly in the green this morning right now at 36 points in the positive. That's 1/3%. You get the Dow right now up 109. Russell up by 8. Crude, talk about some action on Friday, man, from 88 to almost 93, and we're pushing that level again, man. And crude could be the thorn in the side of inflation, man. Now, the Fed, and they said it on their press conference, folks, core PCE. I found it interesting. If you were watching Chairman Powell's press conference last week, somebody asked him, what do you think inflation is at right now? I'm paraphrasing, but it was something like that. And he basically pushed the question off. He wasn't going to answer what the inflation was. But then later in the press conference, he cited the core PCE was at 5.1% right now. That's their inflation number, folks. That would have been his number. Pay attention to that number most. We get CPI, which is an important one. That might be number 2 on their plate right now in terms of tracking everything. But I bring it up because core. Now, I'm trying to have the debate with myself because energy prices are not going to be helpful, man, at all. But core is what they're watching. But really, what's going to factor in a big way in core? Shelter, right? Rental prices in a big way in core, factoring in, and there is a lag there, and you figure that one out. But crude, it's not going to be helpful when the headline number persists. That's going to make things difficult for the Fed as we have crude coming to $93. I'm hearing a lot of news stories right now about whether it's gas prices, right, winter prices. I was reading a story about Boston energy prices going up something like 40-60%, bills starting to go up. It's happening down here, of course, as well. Energy prices coming into November. I also heard Boston got like some 75-degree weather this weekend, so hopefully you out and enjoyed that, because that is a far cry usually on November weather up in Boston. We jump over to gold. We talk about an acceleration as well. Gold up to 1684 this morning from 1686, and we jump to notes and bonds this morning. And we're sitting at about 109.30. Now you got the 10-year, 4.16%, man. 4.16%. You check out the daily, I mean, that's pushing lows. We got lower lows and lower highs. That is the 10-year. Yes, you check out the 30-year, right? Now, I keep bringing this one up, folks. And our man, Bud Rolfs, keeping him in my heart, man. He was the channel king, folks. And this is just such an amazing channel retest, folks. This should be in the textbooks of Bud Rolfs channels, okay? Because now, where is the channel line? You can draw one to the upside. Nonetheless, you call it a trend line, all right? Look how consistently the 30-year, from 1999, folks, December of 99, when this thing took off, you have the 30-year, it breaks through that area. In April, think how far back April. Think about the different world we were dealing with. Let me put it on a daily so you can see the breakthrough in April, all right? So I had it up on the... You trade lower, you come back, there's the sell, folks. August. I mean, if you didn't have that on your chart and you weren't paying attention to it, the next time you see something like this on a spectrum that is this long in time, that is so important, like the 30-year bond, yields, right, treasuries, that market is so huge that usually it's forward thinking. It's a smarter market because there's more money involved, and that's the bottom line. And what does it do, man? From August, it literally, folks, trades almost to the tick, which is insane when you look at that. That's a monthly chart going back 22 years, and the 30-year comes back, tests it, and then boom, that thing takes off and trades from 146 in August to 119, man. I bring it up because there is nothing on that chart that's saying strength just yet, folks. That's a weekly chart, okay? Consistently, quite the move there. And you take a look at what the market's done, okay? There's August 2nd or so. We got a slight reprieve, okay? We've gotten a slight reprieve. But you need a turnaround on those yields, folks, to get a turnaround on this market, because you traded with that CPI data kind of being fuel to the fire that the yields were thrown on top of things. And yeah, you gave up in the process about 800 points at one point during that time frame. Pretty remarkable. We jump over to the VIX this morning as we have higher markets. This is another interesting one, right? There's your daily. Every single day since October 17th, we've had red VIX. How does that make sense, man? Maybe the market is not as uncertain and doesn't need to price in as much premium, folks. Listen to the VIX until it tells you not to. Because right now, okay, they may be fighting through the Fed's words on the VIX because no one's taking insurance to the degree that you might think if this market was going to fall apart, if the Fed was just going to really slam it with rates beyond what people are thinking. It's quite a resilient market on Friday, and we'll see where we open in about 15 minutes from right now as we march forward. We'll start it off with one of the headlines that we'll come back to. U.S. midterm elections could fuel stock rally, and that is Morgan Stanley's Wilson, who's one of the best out there. And his interesting call is inflation's going to fade, okay, and it's not just in this article. Inflation's going to fade. The Fed is going to begin to shift. That may have happened on that last meeting, right? Powell's got the balancing act, man, and he couldn't quite say we're going to look at the cumulative effect without putting the slam back down. That guess what? That doesn't mean that everything's rosy. We'll finish this conversation up, but we got midterms, and that may be a lift in the markets. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now positive by 15. We get the NASDAQ positive by 52. The Dow right now up by 127. So jumping back to, it's going to be the conversation of at least the next couple of days before we get into CPI for the markets. Midterms tomorrow. Republicans probably going to get the House, the Senate up in balance. Anything can happen, as we've seen. The polls can be off, man. We find out, and some states may take some time to count some of those mail-in ballots, depending on how they do it. So what do? We wait, we see, but all indication, folks, are that Republicans are going to take the House. And guess what? The market usually likes midterms in a big way. Now, this is Morgan Stanley's Wilson, midterm set to fuel a stock rally. But he's looking for some recessionary problems next year, okay? So even if you're not a long-term bull, okay, that you see those recessionary fears catching up, you can be a short-term. That's what you can be. And that seems to be the case setting up right now, man. Finishing the conversation on the Fed, right? It's a very difficult task being the Federal Reserve Chairman, having to tell the market that you're going to begin to consider how much you've raised in total without the market overreacting as it has, almost unjustified, previously to what the chairman had said when he said we're going to be data dependent. And what did the S&P trade up? 600 points or something like that? Let's go back and see. What day was that when he had some optimism? Was that around the June meeting? I think that was around the June or the July meeting. Maybe it was the July meeting. And the market traded from 3,700 up to 4,300. And then we found out that was misplaced optimism, folks. Well, he didn't want to repeat that. So what do? You tell him and you change the words. That is the cumulative total effect. And you also say it's going to be higher than everyone thought, though. Well, that's a recoil, okay? But guess what? We get to find out the data. And he can say the other way, okay? If the data just starts crashing, yeah, they can change that course. But it's in his best interest to be as strong-armed as possible and just follow the data, folks. That's where it's going to go. So follow the data on the midterm elections, man. Because guess what? If you see Republicans take that, yeah, there's probably going to be a a change in the market to the upside. And jumping over, okay, this is an interesting one. Wall Street hopes history repeats with a post-election comeback. The S&P 500 historically posts best returns following when? The U.S. midterms, okay? Now, there's a lot going on in this market that many markets of the past have not dealt with. As the disclaimer goes in the finance world, past performance is not necessarily indicative of future results, okay? But it is interesting when you take a look, and the chart I wanted to pull up is this one, okay? U.S. stocks enter historically strongest time in the 16-quarter presidential cycle. And look at these 3 quarters, man. Now, this is since 1950, okay? That's a pretty large number of sample. That was the word I was grasping there. Pretty large sample size, okay? And look at the numbers. And what is that? Okay, that's the year 2, the second quarter. That's coming into midterms, okay? That's where we are right now. The market historically in that quarter is up 7%. You come into the next quarter, 7%. You come into the next quarter, 5%. Those numbers, the top 3 numbers of any of the quarters coming into there. Pretty remarkable, right? Now, here's the other thing that's interesting, okay, is that it's end loaded as well, which that could be a transfer of the administration, right? Because as things start looking in one way or another, maybe there's leads, maybe there's whatever. But guess what? Stay where we are right now. We're right there, okay? And that's where we're coming up right now, folks. We have midterms, and we'll see where we go. But we found out Tuesday in a big way. Now, jumping back to some of the sentiment, let me pull up where we are here. Was it this article I had as well? Yeah, so that's a lot of the data talking about where we are. Now, I had one more article that talked about this in terms of the actual raw data behind it. I guess it's not this one as well. Okay, I'll find it at the next break. In terms of the percentages, shame on me, eh? Here we go. Perfect. Let me get this. Okay. Treasury buyers like the GOP, while the dollar bulls favored Democrats. Now, folks, the likely scenario I think that may play out is that Republicans definitely claim the House, okay? The Senate maybe stays Democratic, but that alone is enough to be a divided government in one of the chambers, okay? Power would transfer in the House, and you have the power of the purse in a certain degree in the House, okay? And that is a big one when it comes to money, comes to spending. Now, what's interesting here is, so this is the MLIV purse survey, which is a big one, okay? Which would be the most bullish for treasuries? Republicans take both chambers of the House. That's where the treasuries may have the run. Why is that? Maybe there'd be less stimulative programs, okay, that might be stimulating inflation. Bottom line, hard to deny with that one, man. Each party wins one, okay? And yeah, that's still debatable in the where. Democrats keep both. Watch out, folks. And that's the market, man. All right? And you got to call it like it is, man. And it's unfortunate how divided things have gotten, folks, with everything. And keep that in mind. And hopefully we have some decency and some class tomorrow, because it's already starting to chirp in the Tiger's Den. And yeah, we'll leave it at that for sure. Okay, jumping around to some of the articles. So we talked about the midterms, okay? And you got Morgan Stanley's Wilson. He's looking for a potential drift higher. Would make sense historically as well. Goldman, what's going to drive this market potentially? Earnings in the future, all right? You stay short term with the midterms tomorrow, but a lot of the conversation of recessions, where does it go? It goes to earnings, folks. It goes to margins, okay? It goes to spending in a recessionary environment, and earnings to remain flat next year versus a 3% growth earlier. September quarter marks the first dip in margins since the pandemic. They lowered the earnings estimates for the S&P 500 for each year until 2024. Saying margins contraction in the third quarter signals more pain ahead. So this is where the shift goes, right? How short-term versus how long-term is the market going to be here? Because if this is where things start to go, if the Fed is considering the total nature of their moves, as in the entire rate hikes, okay, maybe the shift begins next meeting. And if the shift begins next meeting and we have earnings not growing and we have margins in trouble and we have mortgage rates at 7 to 8%, folks. All right, I was talking to my dad this weekend and we were saying, maybe he was talking about potentially the housing market. Maybe it sees a bottom in about a year. I'd probably side with that because there's some lag here, man. There's definitely some lag when you talk about, I think society is just coming to terms in the last 3 months, man, that we got mortgage rates at like 8%. It's like, what happened to 4%, right? What happened to 5, 6, and 7? It's going to be at 8 before we know it. That's going to take some time for people to come to terms with that, for buyers to come to terms with that, for sellers to come to terms that they potentially may need to lower it more than they're thinking, because it's such a drastic difference in the buying power of people that sign a loan, and that determines their buying power. So, of course, it's going to take time. So that could be the shift that takes place as that goes forward, but not what you want to see. Yeah, they're going to contract by 86 basis points this year and 50 basis points in 2023 and return to 2019 level of 11.3%. So we'll talk a little bit more about that when we come back. We'll talk about some of the companies that are moving this morning. It's going to be an interesting day as usual, folks. S&P's up by 13. Stay tuned. We'll be right back. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps. They open up about 16 points. NASDAQ 100 opens up 61. We get the Dow up 112 right now. Let's jump around to some of the FANG stocks, see how we open. Apple, the biggest of them all, negative by about 1/3%. Interesting with the market so much higher. You see a drop off for them last night at about 8 o'clock. We're sitting at 138.11 right now for Apple shares. Let's jump over to Amazon, up 1%. Amazon, that was a low recently, $88, man. You take a look at the daily. I think you got to go back. Yeah. We're almost 1 year, 188 to where we get to? 88. Absolutely remarkable, the pullback, man. $91 for Amazon. And we're basically, are we? Yeah, we're back to December of 2019 prices for Amazon shares at 91.61. Remarkable, the pullback there. Let's jump over to Microsoft. We're catching a little bit of a lift at the beginning of this market right now. The S&P's up by 19. You got Microsoft up by a full percent right now. And what else? Google we'll check out. Google up by 1.5%. Meta, they got layoffs coming. The market likes that, I guess, up 4.5. You know, I was thinking about it in my head, man. The numbers are just so startling on Meta. Down 73%, I think, this year. That's this year, I think. I don't think that's counting last year. Is it? Maybe it is, from the highs. Nonetheless, at some point, man, at some point, Meta has value, folks. You know, they take a lot of it on the chin, but you're talking about a company right now that's valued at $250 billion. And like everybody uses their app across the globe once a month or something. All right. And I may have like 2 shares somewhere or something of Facebook, but I don't really have a position, folks. That's just thinking. You know, they're a cash cow. And yeah, you might have a problem with Facebook, but do you have a problem with Instagram? Because the world doesn't. Right? Do you have a problem with WhatsApp? Because Europe doesn't. There's tremendous value, and you're getting to a point on multiples. The current PE ratio, as listed right now, 9.45 for Facebook. And listen, don't get me wrong, okay? The fear in that stock and the risk that you're facing in that stock is the way these tech stocks are set up, man. What did they do? They gave the CEOs all the power in the world to run that company however they want because they got the voting shares. And guess what, man? They got a lot of money. And if they want to take that money and build for the future, that's what Zuckerberg wants to do. And guess what? If I was Zuckerberg, I might do the same thing, man. Because what's he worth now? Like 30 or 40 billion? Okay, once you're worth more than X amount of dollars, okay, whatever that is, the utility value of every dollar that you're earning above that is basically zero. Okay, now there's always some value above it, but the utility value of that money, well, guess what? AI is going to be the future, okay? He's a pretty young guy. He's bright enough to say, guess what, man? I want to change the world again and take over where it's going to be in 15 or 20 years, right? Because that's probably how long it's going to take for some of this technology to progress. Time flies, folks, okay? Amazon bought Whole Foods like 5 years ago, 6 years ago. I hear that. I'm like, what happened? Nothing. Nothing's changed. They bought that grocery store. Grocery stores tanked all of a sudden. Like the world was going to change 5 years later? No, grocery stocks are doing great, man, in a big way. Okay, so it's going to take a tremendous amount of time. And so that's what you want to keep track of if you're in this stock. I know we love technicals, man. How do you do technicals on a stock right now that's just cascading through every price level it's been at, right, 5 years back? Well, you got the PE ratio at 9.5, and you have to come to terms with whether you're okay with the long enough plan that Zuckerberg may have in that one. Because he is thinking super long term. He is a very young guy. How old is Zuckerberg? Let's see. Let's see his age. What's he? 38. Are you kidding me, man? So that guy's going to be around for 40 more years, at least something like that. If you reach 80 years old, 42, 44 more years, the world changes dramatically in that time. So that's a scary thought. And you're going to be able to spend as much money as you want on AI going forward because it's kind of like that last mile, man. There's always going to be some little thing that can make things a little bit better. I've talked about it before. Well, you got AI goggles, you're going to have an AI suit, you're going to have an AI floor, right? So you can run around and think like you're moving. There's always one more definition of what will define being perfect, and you got to go after it. He's a young guy, man. 38, is that right? That is right, 38, born in 1984. Whew. And he's at about $33 billion right now. So his wealth's going to be fine, folks. The stock could go down to $9, and he'd still be a multi-billionaire. Okay, and that is some serious wealth. All right, let's jump around to what else we have going on. In terms of articles up here, what are we talking about? Yeah, Berkshire, they're a little bit higher in the pre-market. Let's see if they're trading higher right now. They are up by 1.3%, so they have their numbers. Operating earnings jumped 20%. Buybacks, another $1 billion in stock. Berkshire, it was interesting to see him get lapped during the pandemic, right? Took a lot of flack for not putting money in play, a lot of cash on the balance sheet, right? Couldn't find acquisitions that made sense. Well, folks, you see how that plays out, man, and he caught up with some of those stocks in pretty dramatic fashion. Yeah, check it out. I mean, earnings, so that's including profits from everything, $7.76 billion, up 20%. Insurance investment income, that took a hit, I think, because he took a hit. Yeah, insurance underwriting, $962 million, and that was a little bit from Ian in there in terms of Berkshire. But value investing, especially as the market got up to those lofty levels, I mean, learn something from that as well. You always want to learn something, folks, and it's easy if you can learn something from somebody else and what they're doing versus learning it from yourself, if possible. Warren Buffett, obviously a brilliant man. And, sometimes patience is what's most important. And I think we're all getting a real lesson on some of these high flyers and the fade they've had. And, what's one of his biggest positions out there, right? Apple. I mean, they are just pulling back, but in terms of the market where they've been, right, doing pretty well. Now things changed a little bit last week from Tuesday at 155 to 135 this week, but we'll see where that goes as well as the market fails to hold that open. Let's put it back to a 5-minute, why not? And we're red out of the gate. We're below where we were last night. We're coming into 3 in the morning in terms of 37.81. Let's see how the VIX is trading right now if we got any action. Could we get a green VIX today, first time in like 14 days? Doesn't seem the case, because no matter where we open, folks, no matter where we open, okay, the VIX has gone up some days from the prior day, but no matter where we open, you always trade lower throughout the day, which is a pretty remarkable feat when you look at, we got one green day in 3, 6, 9, 12, 15, 18, 1 out of 18, and we're pushing 16 in a row. Is that right? 3, 6, 9, 12. This is the 16th red day in a row in the VIX. If you've ever read up on the laws of probabilities of consecutive things occurring, 16 times in a row is where you get to, start getting some pretty high statistical numbers for probabilities in terms of when that will turn around. And you want to put this thing on going back a little bit further. Just this year, folks, we're getting into some territory now where the VIX has found a bid sometimes, okay? You go back to June, yeah, you found a bid right at 24, right where we just accelerated to on Friday. Chopped around in that area in September. We did get down to about 20 on a couple occasions, but we're coming into a pretty important area in the VIX because this is a relatively low volatility for everything in play right now, right? I mean, think about where we are. We get midterms tomorrow. Polls have shown to be magnificently wrong on past elections, okay? We'll see where we go tomorrow. And then you get CPI later this week. And we still got a lot of earnings coming down the line as we come into a holiday season, man, that is not supposed to be the best for retail. And just ask Amazon and their numbers. S&P's up by 2, NASDAQ barely in the red. Stay tuned, folks. We'll be back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I'm getting a pretty calm market to kick things off, especially after the volatility we had on Friday. Right now, you got the S&Ps up by 8, NASDAQ back in the green by about 6 right now, Dow up by 110. So Apple, looks like they're talking about the drop-off there. They're having some issues with production at Foxconn. Not what you want to hear for the biggest company in the world, that they can't make the products that people want to spend an inordinate amount of money on for no reason. So that's why they're trading lower. Let me see where I was. Yeah, here I was just jumping around. So it looks like Apple, COVID-19 restrictions are hindering iPhone production at Foxconn. If you're following what's happening in China, it should make sense eventually that that's going to hit. But nonetheless, looks like it's coming to roost right now. And yeah, Meta. So it looks like they're preparing a much large-scale layoffs, as we talked about out there. DoorDash got an upgrade. This one's an interesting one, man, because trying to wrap my head around this. So there's the upgrade to 1.1% DoorDash, all right? You take a look at this thing on a weekly, though. Oh, talk about cratering, man. I mean, I guess you might be able to find value just in the same way I was talking about Meta. But I'd be real careful on the restaurant section, folks. Uber's numbers that they just came out with, yeah, it was a big number for ride hailing, that company. Restaurants, I think they were actually down. And I'll tell you, from a personal spending habit, folks, okay, using the gig economy and paying that premium, it's become a lot more difficult to rationalize. Number one, because the cost of everything is going up. So on the gig economy, you're usually paying about a 10% premium on, let's just say, on a restaurant. You might be paying 10% premium. If the meal is $20 at Outback, you order it on Uber Eats, maybe that meal's $23 or $24. Then you're paying a service fee. Then you're paying some other fee that they tack on there, because there's at least 2 fees on there, right? Somehow the restaurants figure that. Why are we just putting 1 fee on a check when we can call it a service fee and some other kind of fee? And then you get a tip. So when you start at a higher percentage, right, then it's a compounding factor. It's basically the way it's working, right? You start with a check of X dollars, then that check goes up by 10% because of inflation. It goes up by 15% over 2 years because of inflation. All right, we're at 8% inflation 1 year, 5% the next year. That's 13% in 2 years. Then you compound that by adding fees, by adding a tip, by adding all that. I myself have become much more willing to pay that extra fee for not picking up the food, potentially making that 10-15 minute run out there, okay, or the likes of that. Instacart I used to use all the time. You might use it sparingly, but it's just too much of a premium on the prices they're going up. Well, the thing about DoorDash is they don't have the ride hailing, because ride hailing is not as much of a premium, right? Uber changed the game. Anytime a company's name becomes a verb in the U.S. language, folks, usually a good thing for that company. Do you want to Uber? It's actually a verb. Their name of that company. People say, they don't say, hey, you want to Lyft there? No, you want to Uber. You might say you want to take an Uber, you want to get in an Uber, you want to order an Uber, all right? But let's Uber. It's a verb. They don't say let's Lyft, okay? Nobody says let's Dash. So realize that in the conversation, because if you're looking at any of these, okay, let's put it that way, I would be looking at Uber, because ride hailing and maybe even Lyft as well, okay, as dismal as that is on that chart, man, because the whole gig economy, man, they might be in trouble, folks, in a big way, because the discount that everybody's getting for venture capital, right? Venture capital supported those companies and lost money year after year to give us all the illusion that it wasn't that expensive. Now they're public. Now they have to make money. Now they have to make margins. And to do that, they have to raise the prices of what you'd normally pay without that luxury, as in the food getting dropped off at your door. So keep that in mind. Uber's numbers last time, kind of a wake up there. Lyft stock looks horrible. Dramatic, no denying that, man. But Uber, maybe you got a little bit of a break, and I don't have any Uber right now. $27.94, but maybe I'll look at it, man, because you were in quite the downtrend. You break out of there a couple quarters ago, you're sitting at $27.93, but travel's never going away, folks. Everyone's going to start taking Ubers left and right instead of renting cars, as they already are, and that's not a luxury. That's something that you just kind of have to do. You either have to rent a car or you have to take an Uber if you're traveling. You go out at night, you don't want to do it, you do it as well. You're ordering takeout, man. You're ordering Outback getting delivered by Uber Eats. No, that's a luxury. Most people, and listen, I got small kids in the house, okay? Sometimes it's not a luxury. Sometimes it's a necessity you got to pay for limited time. That's a lot of what I was doing during COVID even. Instacart, all of that, right? But to a certain degree, it's not akin to taking a ride. So keep that in mind on all of this. You got Uber down 1.7% right now. As the market taking a little bit of a hit, NASDAQ in the red, Russell barely in the red right now. Let's jump over to some currencies. And you got a break here. So that's a weekly. Let's put it on a daily. Okay, we talked about our man Bod Rolfs in the channels. You come back, you test that channel. Now, was that a real test? Well, I don't know if that was a real test, because you got back within the channel line, okay? So it's not like it is on that 30-year, man. We're pegged it almost to the tick that I was talking about early in the program if you were listening. But that's a pretty decisive break lower on a daily basis on Friday, okay? And that's another break lower as well. So very interesting in light of what's going on in the jobs number we got, the break in the dollar, going lower to 110.47. That's part of the reason. Jumping over to gold. You see where the dollar was at Thursday at 113. Now it's at 110 and change. Well, Thursday gold was at 16.18. It's trading at 16.83. Follow the currencies, folks, and pay attention, because that dollar index may have just broken, and maybe that's the most indicative of everything going on. You jump over to the 10-year, not the huge reaction there. Okay, but boy, the dollar index, right? You jump over to the euro US dollar, you talk about a run, man, and you check out the euro US dollar. This thing did have a break. Look at the test, folks, okay? Look at that test, man. Whew. You got the 30-year to the tick, you got this thing to the tick, and you saw the run that the 30-year had going back to August. That is a well-defined break out of the channel. Boy, that may be a wake-up, man. You gold bulls out there, I know my dad's got a new issue of the Gold Report out Mondays every morning. It's out this morning. Sign up for the Gold Report. Might be a great time. New subscribers get a 30-day money-back guarantee. Check out the Tiger Forex Report by our man Teddy Kegstad. That's a weekly letter that comes out as Mondays as well. He talks about Forex. All the newsletters we do, folks. 30-day money-back guarantee on everything we do. Mastering probability. Fibonacci 24/7. Path of least resistance. The opening call. Our man Basil Chapman coming up next. Does an outstanding job. Try out many of them, folks. You get a 30-day money-back guarantee, no questions asked. For whatever reason, you're unsatisfied. You want to cancel in 30 days, get a 30-day money-back guarantee, check it out. And Mondays is a great time to do it, because we have a new trading week. We're coming into midterms, man. This might be the time, folks. Midterms, historically, it would make sense. Markets catch a lift. Republicans get in there, right? They're a check to Democrats. Democrats, maybe too much stimulus, fueling inflation. What's going to happen? Well, Republicans get in there, not as much stimulus, not going to be passing, right? Any type of stimulus as inflation's raging, I'm expecting. And maybe that helps. What's it help? It helps bring down inflation. It helps bring down the need for the Federal Reserve to hike interest rates. What does that give? That gives the market a reason to begin to accelerate, and maybe we're seeing it with the euro taking off, with dollar weakness. But boy, yields are going to have to catch up, and they might be rising a little bit right now as we still have some hiking higher than the market had expected, as the Fed chairman said. Market's holding up pretty well right now. You got gold up by $7. We got the S&Ps up by 2. We'll see how we finish up. We got one more segment, folks. Come on back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets pulling back to begin things. We were just trading about 20 points higher on the open right now. You're trading under 37.80 in the S&Ps. S&Ps red. NASDAQ 100 red. Dow barely in the positive by about 57 right now, jumping back. So interesting time. And I was going over some of the stocks with their earnings this week. Lyft, their earnings tonight after the bell. Not the optimism you like on that stock. And as I said, man, I don't know about that stock, folks, okay? That stock from a technical standpoint, yeah, you could say you're consolidating at some lows there, But boy, sometimes you'd really want to look for some strength, right? And even the last time we got strength on the last earnings, okay, you gave it all back just like that, man. Pretty remarkable. Now, the market gave back a lot as well because their last earnings in August, folks, were August 1st, okay? Whoops, what did I just do? Get me back to the S&Ps. And the August 1st, you traded from 4,300. So they got dragged down with it. But Lyft, they're out with their numbers after the bell tonight. And you're talking about a company right now. You want to trade some volatility, folks? How about a $2.40 move for a $13 stock, man? We take a look at the weekly number. $2.62 is the volatility it's pricing in. So if you're going to be buying options out there, you better be looking for a magnificent move in either direction, depending on what you're doing, because that is a lot of volatility premium, folks. Almost a 20% move priced in to the options on Lyft. Other companies we get, some of the notable ones. Oh, let's see. What do we got? We got Disney this week too, right? Yeah, Disney is out tomorrow after the bell. Disney, $7 move for a $100 stock in Disney. Almost the same thing, man. Tough chart. Maybe you could say consolidating near the lows. Last time, it broke out in August, and you gave it all back. So we'll see. Disney out with their numbers tomorrow after the bell as well, along with some others out this week. And yeah, the market giving it up. Let's see what the dollar's doing as we march forward on this dollar index, DXY right now, back to a short-term time frame. Yeah, just kind of chopping around on the open right now at 110.46, and let's see how the VIX is trading right now. Yeah, pretty calm action, even as the market sold off 20 points on the open. VIX sitting at 25.37. Stay current, folks. Stay short term. That's the best advice I can give you in this market, because we got volatility in both directions, and we got midterms tomorrow. We get CPI this week, and we got the market basically flat right now. Thanks for starting your trading week off with me, folks. Stay tuned. Live programming all day. Our man Basil Chapman, he's coming up next with the opening call. Have a great Monday, everybody. And get out there and vote, no matter what.